How to get rich. The key idea is not to sell your time. And we shall study this idea in detail. In market economies, most people sell their time, either as employees of firms, or as freelancers, or as professionals, doctors, architects, lawyers, or even as managers of firms. In either case, there is a limit to the hourly rate you can charge, from minimum wages to the rate of top-notch lawyers or surgeons. At best, you can become quite well off, but you cannot really get rich. For that, you need to disconnect your revenues from the time you put into generating them. This disconnection is the most important idea. The traditional ways are, for instance, renting flats you own, also the stock market, or horse races bets, and we shall look at each of these solutions in turn. If you received via inheritance or otherwise a large sum of capital, you can make it work. For instance, as we saw, you can buy flats and rent them, or you can buy safe long-term bonds producing coupons. In the stock market, you can gamble on the variation of value of securities, either plainly by buying and selling securities, or with more leverage, buying and selling options. For example, selling short is very risky. You can either use the modern financial theory, but this once in a while leads to a big laugh, like when 2 Nobel Prizes led the fund LTCM to bankruptcy at the end of the 1990s. And that is because you cannot really get rid of risk. You can, like Warren Buffett, turn your back to the modern financial theory and buy when the market is depressed and sell when it is buoyant. You need to be very patient, and Buffett does not really create value. Some people manage to consistently win money at horse race gambling. That's because they understand finely the mechanism of bets, and they know which ones have a positive net expectation, and they are very discreet about their techniques. I may someday make a lesson on that. When, with a large capital, you buy a healthy firm, you acquire, in fact, a stream of revenues. But you don't create value, and you still take risk, and you still need to spend time to care for your investment. The economy of the 21st century, and more specifically Internet, allows us to build assets that will automatically generate revenue and that are disconnected from the time we put into building them and that are potentially unlimited. A website is like a shop which immediately can tap hundreds of millions of clients. If the website sells online things which can be reproduced at no cost, like a cookie cutter, and that can be sold more or less automatically, the potential revenues are unlimited. Another way is to make them, the website, free, and then rent space on their pages to advertisers. Google is actually the world's biggest advertising network, managing relationships between advertisers and publishers renting space on their website, and they manage the flow of money between them. Even though Google is known mostly as a search engine, it is once again an advertising network. Here are Google's results in 2009 in the year-end document that you can find in various places. The numbers are in billions of dollars. The income statement shows sales in 2009 of $23.7 billion and a net income, that is the bottom line, of $6.5 billion. And here is a sketch of the balance sheet. On the asset side, the total of the assets as well as liabilities is $40 billion. On the asset side, we have $10 billion in cash, as well as $14 billion in short-term financial securities, that is almost cash. We have $4 billion of receivables, debtors, and $12 billion of other things, a little bit of fixed assets and other things that I will explain someday. On the liability side, the net worth, that is capital and retained earnings, is $36 billion, and the external debts to creditors amount only to $4 billion. They write on some of the SEC publication how we generate revenue. Advertising revenue made up 97% of our revenues for the 3 and 9 months ending September, etc., etc. And here is a picture that shows the split of revenues of Google. You see that the very large majority of them are ads on Google sites. Of course, building a website which attracts visitors and has traffic will take a lot of time, efforts, and thinking. But then it will generate revenues disconnected from the time we put in it.